Hey there, friends! My name is Rowana, and I am your host of this series of courses. Welcome to our crash course on insurance, your shield against life's surprises. We'll reveal why it's a wallet saver for emergencies like accidents. Learn the 3 key insurance types protecting your health, family, and possessions. Curious how insurance companies work their magic? We'll share their secrets. Plus, get tips to pick the perfect plan without overspending. It's all about balancing costs and coverage like a pro. Grab a snack, hit that like button, and let's unlock the power of insurance together. Ever wonder why people keep buying lottery tickets, knowing they'll probably lose? It's the thrill of a big win. But what if you could protect yourself from a massive loss instead? Welcome to the wild world of insurance. Insurance is your financial shield, helping you avoid devastating losses like a car wreck or a house fire. People pay small amounts regularly, called premiums, to dodge the risk of a huge financial hit. Think of it like paying for peace of mind. This is rooted in something called risk aversion, where folks are happy to spend a bit to avoid a disaster. Unlike lotteries, where you chase big gains with small bets, insurance flips the script. You pay a little to prevent a big loss. It's not about winning, it's about staying safe. By spreading risk across tons of people, insurance companies can cover the unlucky few who face trouble. Stick around to learn how this clever system works and why it's a game changer for your wallet. Imagine a superhero bank that saves you from financial doom. But how do they make it work? Let's dive into the secret sauce of insurance companies. Insurance companies thrive by pooling everyone's small payments, called premiums, to cover big losses for a few. They're like a giant piggy bank for disasters. Their business hinges on 3 key numbers: the loss ratio, which shows how much of every dollar they collect gets paid out for claims, say 80 cents of every dollar for fire damage. The expense ratio, covering their costs like office rent, maybe 12 cents per dollar, and the combined ratio, adding those two together. If they collect $1 million and spend $920,000 on claims and costs, their profit is the leftover 8%. It's a balancing act. Charge enough to cover claims, but keep customers happy. This system lets them protect you from life's curveballs while keeping their business humming. Curious about the types of insurance? Let's explore that next. Picture this. Your car's wrecked, your house is flooded, or you're stuck with a huge hospital bill. Yikes! But don't panic. Insurance has your back. Let's break down the big 3 types you need to know. Insurance comes in 3 main flavors to protect your wallet. First, health insurance covers doctor visits and medical emergencies, so you're not bankrupted by a broken leg. Next, life insurance ensures your family gets a payout if you pass away, giving them a financial safety net. Finally, property and casualty insurance, or P&C, saves your home or car from disasters like fires or crashes. Each type works the same way. You pay a monthly fee to stay protected from unexpected chaos. Think of it as a superhero squad for your finances, each with a unique power to keep you secure. Want to know how these actually work in real life? Let's zoom in on one of the most critical types next. Ever freaked out about a medical bill that could wipe out your savings? Don't sweat it. Health insurance is here to save the day. Let's unpack how it works and a cool trick called HSA. Health insurance, often from your job or government exchanges, covers medical costs like surgeries or checkups. You pay a monthly fee, but if you get sick, it kicks in after you cover a deductible, the amount you pay first, like $1,000. Here's where health savings accounts, also known as HSA, shine. With a high deductible plan, you can save money tax-free in an HSA to cover that deductible. For 2025, you can stash up to $3,350 solo, or $6,650 for a family, plus an extra $1,000 if you're 55 plus. Unused funds roll over, and you can invest them like a retirement account. After 65, you can even use them for non-medical stuff, with taxes. HSA are like a financial Swiss Army knife, protection and savings in one. Curious about protecting your family? Let's talk life insurance. What if you could insure your family's future, even if you're not around? Sounds like a superhero move, right? Let's dive into life insurance and its two big players, term and whole life. Life insurance pays your family if you pass away, but it comes in two styles. Term life is simple. You're covered for a set time, like 10 years. Die during that term, your family gets paid. After, nothing. It's affordable and comes in level term, which means same payout, or decreasing term, which means payout shrinks. Another one, whole life, or permanent insurance, covers you forever, even if you live to 100. It includes traditional whole life, fixed premiums, universal life, which is flexible payments with a savings component, and variable life, which is invest your cash value like stocks. Each fits different needs, term for short term, whole for lifelong security or investment. Pick based on your budget and goals. Want to know how to protect your car or home? That's up next. Imagine your car gets totaled or a tree crashes through your roof. Nightmare, right? Don't worry. Property and casualty insurance is your financial bodyguard. Let's see how it saves your home and ride. Property and casualty insurance covers your house and car, and it's often required by law or your mortgage lender. You pay a premium, which is your monthly bill, to stay protected. If disaster strikes, you cover the deductible, say $1,000. Then the insurance pays the rest, up to the covered amount listed in your policy's declarations page. Lower premiums sound great, but they often mean higher deductibles or less coverage, so balance is key. Insurance companies pool everyone's premiums to cover the few who face fires, floods, or wrecks. It's like a group hug for your wallet. Choose a policy based on your home's value and risk tolerance. Not sure how to pick the right coverage? Let's break down the key terms to make you a property and casualty pro. Feeling lost in insurance lingo? Don't let terms like premium or deductible scare you. Let's crack the code and make you a savvy insurance shopper in minutes. When you buy insurance, you'll hear three big terms. The premium is your monthly payment to keep coverage active. Think of it as your ticket to protection. The deductible is what you pay out of pocket before insurance kicks in, like $500 for a car repair. Higher deductibles mean lower premiums, but you'll pay more if something happens. The declarations page shows your covered amount, the max the insurance will pay for a disaster, like $200,000 for a house fire. Lower coverage cuts your premium, but leaves you riskier. It's a trade-off. Cheap premiums might mean less protection or worse service. To pick the right policy, decide how much risk you can handle and what coverage you need. It's like customizing your financial armor. Want to see how this applies to your health insurance? Let's wrap up with a game-changing tip. Ready to be an insurance rock star? Choosing the right policy can feel like a puzzle, but we've got the cheat code to make it fun and simple. Let's dive in. Picking insurance isn't just about the cheapest price, it's about what fits your life. For health insurance, consider a high-deductible plan with an HSA to save tax-free for medical costs. For life insurance, go term if you need coverage for a set time, like 20 years, or whole life for lifelong protection with savings perks. For property and casualty, balance your premium, deductible, and coverage based on your home or car's value and your comfort with risk. Ask this question: can I afford this deductible? Do I need maximum coverage? Your goal is protection without breaking the bank. Think of it like building your financial fortress, strong but affordable. With these tips, You're ready to shop smart and sleep easy, knowing you're covered. Now go conquer those policies like a pro. Today, we talked about why insurance is your financial superhero. It's like a shield against life's big surprises. Think medical emergencies, losing a loved one, or a car crash. You pay a small monthly fee, called a premium, to an insurance company, and they cover major losses so you don't lose everything. This works because people naturally avoid huge risks, a concept called risk aversion. There are 3 key insurance types: health insurance for medical bills, life insurance to support your family if you pass away, and property and casualty insurance for your home or car. Choosing insurance means weighing premiums, deductibles, and coverage to match your budget and risks. It's your safety net, keeping you secure without breaking the bank. Subscribe for more tips on protecting your finances. Next video, we will talk about your retirement plan.